Silver had a better week than gold, but it was down on Friday. Silver was down 1% Friday, while gold was up 0.75%. But on the week, silver was up 2.7%. Now, the reason for that is silver and gold are very highly correlated. But on extreme risk off days, where all the risk assets are tanking, people still sell silver and buy gold. But silver should recover that shortly, probably maybe early next week. Same thing with gold stocks. Gold stocks were down on Friday, but up on the week, even though gold was up.
In today's news recap, why silver is becoming a better investment than gold in 2025. In the ever-shifting landscape of precious metals, a remarkable trend has emerged that's catching the attention of savvy investors worldwide. Silver, long overshadowed by its more illustrious cousin, is now stepping into the spotlight as potentially the smarter investment choice for 2025 and beyond. Let's uncover why many financial experts are now whispering silver might just be the new gold. Unlike gold, silver boasts a dual identity as both a precious metal and an industrial workhorse. Silver's extensive applications in green technologies, particularly solar panels and electric vehicles, have created unprecedented demand pressure, explains Alex Abkarian, COO of Allegiance Gold. This industrial utility gives silver a fundamental advantage that gold simply doesn't possess. The statistics are compelling. Industrial consumption now accounts for over half of all silver demand, with renewable energy sectors driving significant growth. This expanding EV market alone requires substantial silver components, creating a supply-demand imbalance that could propel prices skyward. A perfect storm of supply constraints. While demand surges, silver's supply remains stagnant, creating what investors call a perfect storm for price appreciation. Unlike paper currencies that can be printed at will, silver has finite availability, making it an increasingly attractive inflation hedge alongside gold. Rick Rule of Sprott notes, industrial demand has been becoming increasingly important for silver, especially due to its use in solar panels and electric vehicles. This technological advancement continues to outpace mining production, creating a widening deficit. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes.
Anyway, so we got a big stock market sell-off on Friday. And looking at the stock futures right now, it's continuing. The Dow futures are off about 180 points. That's about 0.5%. NASDAQ futures are down 1.5%. So the NASDAQ is considerably weaker. I'll start off. I'll go over what happened in the market, and then I'll talk about the whys. Because, I've been talking about the weakness in the market for a while on the podcast, so it's not a surprise. But anyway, so on Friday, the Dow was down 1.7% on the day. Pretty big drop. 2% decline for the week. So almost all the week's declines happened on Friday. S&P dropped 2% on Friday, but 2.6% on the week. Now, the Dow and S&P are down 7.8 and 7.6% respectively from their highs. So not quite correction territory. I think we'll be there soon, but we're not there yet. The NASDAQ is in correction territory. It was down 2.7% on Friday and 4% on the week. And as I just said, it's down another 1.5% Sunday night, right? So it's down 14.3%, not counting tonight's action, 14.3%. So halfway really between a correction and a bear market. Russell 2000 is doing the worst, right? And that one is, probably the closest to the domestic economy, right? A lot of multinationals in the S&P, the Dow. But The Russell 2000 is very much domestic. And that was down 2% on Friday, 3.3% on the week. And it's 18% below its high that it just hit not too long ago. So we're almost in a bear market. In fact, we could be in a bear market in the Russell 2000, maybe by tomorrow, but certainly by next week, we could be there. Now, Bitcoin, not to leave Bitcoin out, also had a bad week, down 3.8% on Friday. I'm looking at the ETFs now, not because Bitcoin trades 24/7, but just looking at the ETFs that trade. So it's apples to apples with the market. The Bitcoin ETFs were down 3.8% on Friday, 4.3% for the week. Now, Bitcoin itself is down 25% from its high. So it's in a bear market. Now, the interesting thing about that is that it's been touted as digital gold. Well, actual gold hit a new record high on Friday. It closed at $3,085 an ounce. Gold was up 0.75% on Friday, and it closed up 1.85% on the week. And in fact, this evening, as Bitcoin is down again, barely holding on to 82,000, gold is at a new record high. It's trading at 30,090. It hit 30,097 earlier today. It would be interesting if we hit 3,100. Maybe we'll hit it tonight. Maybe we'll hit it tomorrow. But when gold hit 2,000 for the first time, it was during COVID. It was in 2020, summer, I think April or August, summer of 2020. August. It didn't hit 2,100 for 3.5 years. So it took 3.5 years, all the way until December of 2023, to get that extra 100. That's how much resistance there was at 2,000, that it took 3.5 years to get to 2,100. And then, of course, once it hit 2,100, it really started to climb and hasn't looked back. But if we hit 3,100 tonight, it'll be 2 weeks to go from 3,000 to 3,100 versus 3.5 years to go from 2,000 to 2,100. So this is a huge bull market. But the point is, Bitcoin is behaving nothing like gold. Bitcoin is going down with stocks, except it's going down more than stocks. So how is it digital gold? I mean, if it's digital gold, it should have something in common with gold. It should trade similar to gold. It should have some kind of positive correlation. It doesn't have any.
In today's news recap, Goldman increases gold forecast to $3,300 an ounce by year end. Goldman Sachs Group Inc. ramped up its gold price forecast to $3,300 an ounce by year end, citing stronger than expected central bank demand and solid inflows into bullion-backed exchange-traded funds. The bank's increasingly bullish view on the precious metal was shown by the new forecast from analysts Lena Thomas and Don Striven, who just last month upgraded their end 2025 price target to $3,100 an ounce. Official sector appetite could average about 70 tons a month this year, up from their previous estimate of 50 tons, they said in a note on Thursday. The precious metal has rallied 15% so far this year, extending strong gains last year that were partly fueled by the Federal Reserve's pivot to monetary easing. Prices this month breached the key psychological threshold of $3,000 an ounce for the first time, with investors seeking refuge in the haven asset as President Donald Trump's disruptive agendas on foreign policy and trade cloud the outlook for the global economy. The new $3,300 an ounce forecast reflects a pickup in purchases through the November through to January period, with central banks scooping up about 190 tons per month, the Goldman analyst said. There are also expectations that China may continue accumulating at a rapid pace for at least 3 years, they added. Central banks, particularly in emerging markets, have increased gold purchases roughly fivefold since 2022, following the freezing of Russian reserves, Thomas and Stryven wrote. We view this as a structural shift in reserve management behavior, and we do not expect a near-term reversal. Inflows into gold-backed ETFs had surprised to the upside, with renewed investor demand for hedges likely driving the expansion, the analysts said. They reiterated their view for 2 rate cuts from the Fed this year. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
It's the opposite. It's anti-gold, right? And so why do we need a strategic reserve of it? We don't, right? The whole idea was, hey, we have a reserve of gold, so we should have a reserve of digital gold. But Bitcoin is not digital gold. It's digital risk. So we don't have a reserve of penny stocks. So if we don't have a reserve of penny stocks, then why should we have a reserve of Bitcoin? Now, another ridiculous thing, and I wanted to get back to that again, Bitcoin, some of the comments that I've seen trying to hype up Bitcoin. One, you had Bo Hines, who is on the president's Council of Digital Assets, right? What a waste that is. I just said we should have abolished the economic advisors. Well, we shouldn't have even established a council on digital assets. What the hell do we need that for? I mean, again, that's just Trump pandering to the crypto community that helped get him elected. But he came out and said that selling our gold reserves to buy Bitcoin is on the table. Now, why did he say that? To get the price of Bitcoin to go up. That's all. I mean, if it's on the table, it's going to be there forever. They're not going to do that. The government's not going to sell our gold to buy Bitcoin. So why is he saying that? To help his friends sell their Bitcoin, maybe to buy gold. Who the hell knows? But the interesting thing is, with all this talk about the government buying Bitcoin, Bitcoin's down 25%. With all this talk about the government selling gold, gold keeps hitting new record highs, right? Also, that Senator Loomis, who I really, she needs to be beat in the primary and out of the U.S. Senate because she's all about Bitcoin and I can't take it anymore. She said something so dumb, right? So she was talking about how we could get more Bitcoin on the government's balance sheet without it costing the taxpayer any money. So what she wants is the government, the Fed or government, to revalue the gold from the $42.22 that it's on the books now. That's where it was before we left the gold standard, 1971, after a couple of devaluations by Nixon. She wants to market to, almost 3,100 where it is now. And then she wants to take those gold certificates that the Fed owns and convert them into Bitcoin. Well, how do you do that? The certificates have no market value. They're not worth anything. They're certificates that can't be redeemed in gold. So what's that? Right? If you have a check that can't be cashed, what's the check worth? It's not worth anything. Right? At one time, the gold certificates were redeemable in gold. Now they're not redeemable in anything. So what difference does it make if we want to say gold's $42 an ounce or gold's $3,000 an ounce? You can't get any gold with your gold certificates. So how do you convert them into Bitcoin? Now, I guess what she wants the Federal Reserve to do is take the value of the theoretical value of worthless gold certificates, right? And print money. Print $800 billion. So the government could take that money that was just printed and use it to buy Bitcoin. Well, if they do that, it's going to cost the taxpayer a fortune because that's massive inflation. So the taxpayers are going to have to pay higher prices for everything so the government can buy Bitcoin. But why should they buy Bitcoin? I mean, it's going down. It's not digital gold. And if they buy it, it's still going to go down. It's just that it may be higher so that the people who want to sell it can sell it.
Do you agree with Peter Schiff's take? Is gold finally breaking free from decades of manipulation and about to soar even higher? Will we see $4,000 gold in 2025, or is this just another temporary spike? Let me know your honest thoughts in the comments below, especially your realistic price target for gold and silver this year, and if you're stacking or staying on the sidelines. Also, make sure to check out this next video right here. It's a perfect follow-up. I'll see you on the other side.